In prop trading, the two-step challenge is the ultimate proving ground, but not all firms are built equal. Today, at Propfirm Pilot, we are pitting the industry veteran FTMO against the career-focused 5%ers and the low-cost disruptor funding pips. We are stripping away the marketing to see which firm offers the best rules, lowest fees, and the fastest path to your payout. So let's start the video, and at first, I'll be searching for Propfirm Pilot. I'll be going with the first result. And this is the official page of Propfirm Pilot, where even you can do the side-by-side and comprehensive comparison of your favorite prop firm and get a clarity that which firm suits your trading style the best. With that said, now let's find our prop firms. So at first, I'll be searching for FTMO. The next one is the 5%ers. Let's choose the high stake. And at last, let's search for funding pips, two-step challenge. I'll be going with the normal two-step challenge. Now let's remove it. Now this is the side-by-side and comprehensive comparison of all these three prop firms. Now let's start with the factors. So the first factor is establishment. So basically, establishment is the place where these firms are based in. So FTMO is based in Prague, Czech Republic, and the 5%ers is based in Israel, while Funding Pips is based in Dubai. And among all of them, FTMO is one of the oldest. Now let's talk about the profit target. Since it is a two-step challenge, so we are having two profit targets. That is, the first profit target for the first phase and the second profit target for the second phase. So in the first phase, you got to have 10% of the profit to pass the first phase in FTMO, and the second phase is having 5% profit target, and it is 8% for the 5%ers and 5% in the second phase. While Funding Pip is having equal profit target as the 5%ers, that is 8% in the first phase and 5% in the second phase. So here, comparatively, the 5%ers and Funding Pip seems to be having less profit targets. But other factors also matters to choose a prop firm. So let's talk about the maximum loss now. So among all of them, it is 10% overall maximum loss, and that too it is fixed, which means that your loss will only counted once you close the trade. Now that brings us to the maximum loss is to profit ratio. Now this ratio helps us to know that which challenge is easier to pass. The higher the ratio, the tougher the challenge is going to be. So in FTMO, it is 1:1.5, and for 5%ers, it's 1:1.3, and it is similar for funding pips too, that is 1:1.3. Now the next thing is daily loss. So all of them are having equal daily loss, that is 5%, and that too balanced or equity based, which means that whichever will be lower, it will be considered as your daily loss, either your running trade or your closed trade. Now the next rule is about minimum trading days, which means the least amount of trading days you have to trade in a challenge. So in FTMO it's 4 days, and for 5%ers it's 3 days, and for funding pips it's 3 days also. So basically, to fulfill the criteria of the minimum trading days, you need to book 0.5% profit in a single day or a single trade. And having such profitable trades for the minimum trading days will fulfill your minimum trading days criteria. Now the next factor is payout frequency. So it is quite self-defined. So in FTMO, the payout frequency is monthly, while 5%ers is having the frequency of bi-weekly, and FTMO is having multiple payout frequency, that is weekly, bi-weekly and monthly. Of course, that matters on which kind of add-on you are taking. Now the next factor is profit split. So all of them are having 80% profit split, though funding paper is having 60% profit split too, but let's consider the mid one right now, that is 80%. Now the next rule is quite crucial for the traders who scalp or day trade, and they are having interest in news trading. So all of these firms doesn't allow you to do the news trading. Now let's talk about the weekend holding. Now it is quite crucial for the traders who are having a positional trading style. So in FTMO, you won't be able to hold on weekend, that is Saturday and Sunday. while 5 percenters and funding pip allow you to hold trades on weekend. So be careful while choosing a firm if you are a positional trader. Now the next thing is consistency rule. So according to this rule, the firm limits you to make a certain amount of profit in a single day of the overall profit. So all of them are not having any consistency rule, which is quite good for the traders, that you are not having any profit cap on your trades. Now the next thing is broker. So all of them are having in-house broker, which makes it a break even among all of these. Now the next factor is the type of account you are going to trade in. So in FTMO and funding pip, you are going to get simulated account, which means that you won't be trading with a live capital. While 5 percenters is having live trading account type, which means that you are going to trade with real money, which assures your payouts. And since we are talking about taking positions and trades, this brings us to commissions, which means the money you are going to be charged for trading in the market. So in FTMO, the commission is $5 and it is $4 for the 5 percenters, and funding pip is also having $5 commission. So here, the 5 percenters seems to be better. Now the next thing is spread. So all of them are having raw spread. So it is quite break even. And it is also that you are going to find out different spreads once you check their trading platforms. Now let's talk about the leverage. Now leverage is a capability where you take more position just using your $1. So in FTMO, the leverage is 1:50. And in the 5 percenters, it's 1:100, and the funding pip is also having 1:100 leverage. So in this criteria, the 5 percenters and the funding pip seems to be better. Now let's talk about the platforms. So FTMO is having multiple wide range platform options. That is MetaTrader 5, TradeLocker, CTrader and even MatchTrader. While the 5 percenters is having only one option in the trading platform, that is MetaTrader 5. And funding pip is having three multiple trading platform options, that is MetaTrader 5, CTrader and MatchTrader. So this is quite a personal choice, so I'll leave it up to you. Now let's talk about the fees you are going to pay for a 100k account in these prop firms. So in FTMO, you gotta pay $588 for a 100k account. And in 5 percenters, it is going to be $545. While in funding pip, the charge is $529. So comparatively, funding pip is the most affordable among the three. But of course, you have to check the rules which aligns with your trading style and your psychology the best. So traders, that was the breakdown. Whether you choose the stability of FTMO, the scaling of the 5 percenters or the speed of the funding pips, the best firm is the one that fits your strategy and your psychology. That is why always remember to do your own research. And don't forget to check the links below for the latest discounts. We'll see you in the next video. Till then, happy trading!